If you were thinking about investing in our fund and investing with Praetura, it is an allocation to VC, so venture capital. Lots of media about venture capital, increasing amounts of media attention on venture capital. What it is exactly what Daniel said, which is aimed at investing in early stage businesses with the potential for hypergrowth. When you invest with Praetura, we look to give everyone a diversified portfolio of 8+ companies. I think EIS has traditionally been used as, some people have done it on single stock investments where they know somebody or they've got a friend who's building a business and they've done their own personal investments. In our mind, that's not the greatest way to do investing in EIS. A fund approach where you get the opportunity for growth, but you also have some element of diversification is the best way of going forward. And we're obviously here in Wigan. We're a northern business, which makes us pretty unique in the world of venture capital, and we have a focus on investing in the north. It's something we're very passionate about. It's where we're from, and we also think it's a huge opportunity because, frankly, there aren't many of us, so we get our pick of the best businesses up in this part of the world. So, if you were thinking about investing with Praetura, why would you invest, and what do we have to do to give you a return? So the first thing we have to do is find and back exceptional founders and companies. That's pretty much the golden rule. If you can't do that, everything else we do is irrelevant. The second thing we have to do is add value, providing more than money. So if you came to our office, more than money is plastered all over our office. It's everything we talk about. And what that means is helping founders build the best business they can. And the final thing is to provide real insight to investors and build a relationship with investors. Traditionally, this sort of product, the communication with investors has been pretty poor. We're trying to make that better and make investors in our fund feel like they're really part of it. They understand where their money has been invested. They understand what's going well, but equally they understand what's not going so well, because this is a venture capital portfolio. Not everything will go to plan. And it's really important that investors see that and understand exactly where their money is. So, backing exceptional founders. We've been doing this since 2011 when I co-founded the business with two business partners. Since 2011, we did sort of, until 2018, we did deal by deal investing. And in 2019, we launched our first fund. In our past, we have co-founded a business called PIB Insurance. The P actually stood for Praetura. That's recently been bought by Apax for £1.3 billion. So technically, I'm a co-founder of a unicorn, but my bank balance definitely doesn't say it, because we sold that after 18 months to Carlyle Private Equity. We made our investors 4 times money in 18 months. Carlyle offered them, the management team, £250 million to go and buy up lots of businesses in the insurance space, which as 3 lads from Manchester, we couldn't really match. We were the first investor in Inspired, a business based up in Kirkham. When we got involved in that, it was doing about £1 million of EBITDA. We got involved with it. I actually became CFO. We listed the business. It grew to 20 million EBITDA, 200 million market cap, and our investors in 7 years made 16 times their money, which is obviously a great return in 7 years. We co-founded a business called Artoris, which is a wealth management business based in Manchester, and we were the first investor in PKI, which is a AI business. It's based in Manchester. It's got clients like PepsiCo, Nike, ASOS, Boohoo, massive clients, just won KPMG. When we invested £1 million at 4 million pre-money valuation. Recently, it was just been backed by SoftBank, who you might have heard of as being the investors in WeWork. SoftBank backed it at 170 million pre-money valuation, post-money 220 million pounds. So they raised 70 million pounds from SoftBank and us. And it's grown to 15 million of ARR, stands for annual recurring revenue there. It's a software business. We were an investor in Challenge, which is based in Wigan. When we invested, they had 17 million of revenue. They now have 750 million of revenue. We are very close to exiting that business, and that will return about 10 times money to our investors. And we were the first investors in Sorted, which has grown since we invested to sort of 7 million ARR and backed by Merry and Chrysalis, who are a listed fund backing hyper-growth businesses in the UK. So we've got a strong track record. And we've had some successful exits. So our first round of investment in 2011 to 2013 has already returned as a cohort 4.3 times money to our investors. We believe we have a further 3.3 times money to return to that on things we still hold in that portfolio. That was a portfolio of £6.4 million, 8 companies in the portfolio. In 2014 to 2016, we invested into 9 companies. Portfolio was about £8 million of investment. We've already returned 2.3 times money to our investors, and we think we have another circa 2 times to go, although that could be higher. Within there is a business called EC3, which we invested in 2014. In 2017, we sold that to BP Marsh, a private equity business, and we'd turned £600,000 of investment into £12 million of cash for our investors. So gone very, very well. And in 16 to 18, we think we've done further investments, and we think we're on for sort of 4 times money for our investors. And if we compare that with the majority of our competitors, and this is all taken from a website called Wealth Club, you can see that we have had some success, which is at least in the realms and potentially a bit better than some of our major competitors in the IS space. And that's great. We've done some good stuff. We've also learned a lot. We have backed things that we shouldn't have. We've made mistakes in investing. We've got the zeros as well as the great results, but they're all accounted for in our returns there. But for new investors, what does that mean? Well, the first thing we have to do is to be able to continue to back exceptional founders, we have to look at lots of opportunities. We have to identify the exceptional ones. We have to win the mandate in competitive situations. So for exceptional founders and companies, it's not just Praetura looking to back them. There are other funds and investors who are looking to back them. So we've got to win those mandates, and we've got to have the capital to back them. So we do see a lot of opportunities. We see 200 opportunities a month. We have a team of 10 in our investment team who assess all of those. Now those 200 get whittled down pretty quickly to about 50 that we look at in detail, and about 15 of those we would go on and start really looking into in a huge amount of detail. Last year we saw £3 billion worth of funding opportunities. We invested about £25 million, so our bar is very high. And we do now about 1 investment a month out of all of that. We've also learned since 2011 our investment criteria. So what does a good deal look like for us? The first thing we look at, and this is kind of where we cull that 200 down to about 50, is mission, model, and market. So mission is about what is the business trying to do. So we're pretty keen that the things we invest in should definitely be doing no harm and hopefully be doing good for the world. So we will not invest in things like Q-commerce, so your quick deliveries, your 10-minute groceries, because frankly, I don't think anyone needs that in the world. We won't invest in buy now, pay later, because lending money to people who don't need it or can't afford it so they can buy more fast fashion t-shirts doesn't help anybody in the world. So we won't do things like that. And what we're looking to is really buy into what is the business trying to do, and is this something that we can get behind and support. The model, we're looking for something that's scalable. So tech obviously is really scalable, so software business is something we do. But out of all the business we've backed, Inspired Energy, EC3, they're not tech businesses, but they had a very recurring revenue stream and were very, very scalable and very profitable. So we back anything with that kind of recurring revenue nature. A market is really about, is this a big enough market, or is it a market set to grow? And that's kind of where we get rid of most of the businesses. The big area we spend time on is management and momentum. So we spend a hell of a lot of time with management when we're looking at these deals. Our deals take 4 to 5 months to complete. Most of that is spent time assessing management, working with management, asking them all the difficult questions, going through and it's not just the founders, it's the people underneath the founders, it's everyone in the business. We talk to everybody, and we're trying to assess, is this founder, is this management team exceptional? And it's always a team. We very rarely back single founders who want to be everything, because one single founder on their own with no team about them really struggles to scale a business. So we're very much about the team. And momentum is our way of looking at, is this business doing something great already? We very, very rarely invest in pre-revenue businesses that have never sold anything. Most of the businesses we back have sold product. We're looking to see that they are accelerating that growth. They're selling more and more contracts, and that there is real momentum in the business. And this is where we spend a hell of a lot of time. So we speak to customers. We speak to potential pipeline customers. We go and literally go into the detail and speak to people who are lined up to potentially buy the product. So, and that's where a lot of businesses fail to get through our diligence criteria. And the last thing we look at is, can we help them? And if we can't, we don't invest. Similarly, if the founder doesn't want help, and they do exist, right? So some founders want to take the money and basically ask us to leave them alone and see where they get to in 3, 4, 5 years. That's great. There's nothing wrong with that. It's just not for us. So we won't invest in things where there isn't a kind of opportunity to really partner with the management team. I talked a little bit about winning the mandate, and the fact that we're a founder-led business ourselves is really important in this. We've grown a number of businesses. We co-founded a number of businesses I mentioned before, but within the Praetura group, we've grown not only the ventures business that I run, but also the Praetura Asset Finance, which lends against plant machinery and kit, Praetura Commercial Finance, which does invoice discounting, and Praetura Invoice Finance, which does factoring. We've grown all those businesses now to 135 employees. I think this is constantly out of date because people are constantly joining us. We'll probably be 150 in a few months. We're about 420 million of AUM and lending book. We have transacted way over 560 million of investments and lending. And last year we had 30 million, or this year 30 million of revenue and 7 million EBITDA. The fact we've built those businesses, we've made the mistakes, we've hired the wrong people, we've missed our budgets, we've not raised as much money as we hoped, really resonates with the founders we're looking to back, because we have empathy for the struggles that a founder is going through, because it isn't a linear path from start up here, sell for £1 billion over here. Things don't always go to plan. Many of you guys will run your own business. You'll know what I mean when it says it doesn't always go to plan. So that gives us real resonance, and that's where we are able to win mandates in a competitive situation. This slide is mainly based on when I talk to people from London who think that every good business in the UK must have come from London, which is frankly bullshit. So this is a list of all great companies in the Northwest. There could be pages and pages of this. I don't probably need to spend too much time talking to you guys about the great businesses that come out of the North. We're really, as you can tell, I am passionate about what we do and that backing founders in the North. And we're looking to back the next generation of those businesses. And finally, we talk about having the capital to back them. And this is really important for us. The more money we can raise, the more credibility we have in the business, the more founders want to work with us. So in the first 7 years of our life, we raised £37 million for our investments in EIS. In 2019, we launched our first fund and we raised £16 million. In 2020, during COVID, we raised another £16 million. And I'll be honest, when we sat in COVID in March 2020, I didn't think that number would be 16 million quid, let me tell you. I assumed that would be zero. And in 2021, we had a bit of a step change. We raised £51 million, which is about kind of us really growing into what we're doing and really learning what we're doing. And in 2022, already 4 months in, we've raised £41 million. And in there, the red bar is British Business Bank. They have partnered with us to help us deliver some of this stuff that we're talking about. They partner with us on every deal we do. For every £1 million we now invest, 70% comes from EIS funds, 30% comes from the British Business Bank. That £20 million happened after about a year diligence process with the British Business Bank. And the green bar is something that will be announced on the 24th of this month, where we have been selected to run a early stage health venture capital fund on behalf of Greater Manchester Council, Cheshire Council and Bruntwood. And that will be announced in the 24th of March. And actually, total aside, nothing to do with the presentation, Andy Burnham's going to be talking about all the good things about Praetura, and I'm going to be handing over the mic to Andy Burnham, which is something I never thought I would get to say. Okay, so that's backing exceptional founders. And every VC in the world will tell you that's what they're trying to do. Where there is a real difference in some VCs and other VCs is what we call more than money, which is how you help a founder build the best business they can. And one thing we did right at the beginning of the journey of sort of launching our first fund, 2019, was invest in our team. So we raised capital ourselves at Praetura Group. We recruited the people we felt we needed to do to deliver our service. And we did that before we'd built our AUM. So what we did, rather than most funds which kind of raise their AUM and then work out what they can do, what they can spend on people with based on that revenue, we decided to do it the other way. We built the team we wanted and believed that AUM would come. And that's exactly what's happened. And at this point, I'm going to, just before I turn over to the next slide, I just want to tell you a story about how we deliver and add value to the founders we backed. Because when we first launched our fund, we didn't know how we were going to do this. We didn't know how we could do it at scale. We had some ideas, we had some plans. We had some grand plans actually, but we didn't really know how to do it. And in 2020, so COVID, March 2020, I'm sure everyone remembers where they were when lockdown started and all that horrible stuff that kind of happened straight at March 2020 and the shock to the system. I honestly thought that Praetura was probably dead. Every business we'd backed to that point would go bust. We'd never raise any more money. The money we'd lent in the lending side of the business would never be repaid. I had some really dark days, I'll be honest. 10 years of work I thought was potentially down the drain. And I started speaking to a guy called Steve Corns. Steve was CEO, CFO of AO.com. And he was an investor in our first fund. We started talking and an ad hoc conversation became a weekly conversation, we didn't miss, a mentoring conversation every Friday, which we religiously didn't miss. Steve became chairman of Praetura Ventures. Steve invested in Praetura Group. And I sat at Christmas in 2020 and thought, I've learnt more about running a business in 9 months working with Steve than I did in 9 years of just getting up and doing the thing I thought was the most important thing to do that day. I thought, how awesome would it be if I could provide that service to every founder that we've backed? That level of support, that level of mentorship. And that's where we came up with operational partners. And I'm going to embarrass Colin because one of our operational partners is sat here today. The operational partner program we built is how we deliver the promise of more than money, how we help a founder build the best business they can. We've brought in 8 people who work with us as operational partners. I think it's fair to say with the backgrounds of them, and I'll just pick a few out. Colin, 2-3 years ago, was in Apple in Cupertino, reporting to Tim Cook. He's run Apple Japan, Apple Careers online digital stuff, senior retail at Apple. Came back to the Northwest for family offices, and I can't quite believe, with Colin's background, that he works with us and with our founders. But it's not just Colin. So Dom McGregor in the middle, co-founder of Social Chain. You will probably have seen Stephen Bartlett on Dragon's Den and various things. Dom was his co-founder in Social Chain. On the left, on the one in from the end, Helen was Chief People Officer at Dr. Martens. She brought the entire exec team into Dr. Martens. She grew the team from 850 to 2,500 and was a senior member of the team when they floated it for several £billion. Paul Johnson, with MPP underneath him, is a founder of a business called MPP Global. He founded it, was CEO, sold it for just under £50 million last year. All these people don't need to work. All these people don't need to be paid by us. All these people are helping us to help our founders to build the best business they can because they want to, because they enjoy it, because they want to help founders, the next generation. We pay them a little bit, but they aren't doing this for the money. They're doing it because they want to do it. And this is how we deliver on the promise of more than money. And it is probably the biggest thing we've changed in the business since in 2021. And it works so well. We've got 27 businesses in our portfolio, and we add a new operational partner every 3 companies that we add to our portfolio. So we ensure that we can actually deliver on the promise of actually adding value. Loads of VCs talk about this. Every VC in the world will say they add value. Most of them don't have the people to do it. So you've got a 5-man team with 50 companies in their portfolio. How on earth are they possibly going to add any value other than just turn up and read the board packs? So, what do the operational partners do? We have a framework. We talk about people, strategy, execution. What we're trying to do is help the founders to build the best business they can. Some of them are very early stage, some of them are slightly later stage. Each one is unique, but what we're trying to do is use a framework to enable a conversation, a coaching conversation, so they can build, so they can learn and improve from where they are to where they want to get to. And we talk about sort of people, so leadership team, is that in place? Culture, have they got an idea of what culture they want to have? If you're going from 10 people, and I've learned this the hard way, if you go from 10 people in the company to 150, you really want to have worked out what culture you want to have before you recruit those extra 140 people, because otherwise you will get the culture you get, not the culture you want. So we go through all of these, and I won't go through all of this, but we have a framework for how we help the businesses doing, and the people who deliver that are the operational partners. We also have a number of venture partners who have invested significantly in our funds, and within those venture partners there's an opportunity to co-invest with us. Last year we had an average of about 16% of everything we invested came from venture partners who co-invested alongside us on a deal-by-deal basis, having already invested in the fund. And some of those venture partners, you can see some great logos on the side, are really impressive people. Some of them get really involved, and some of them have actually become non-exec directors of companies we've backed. Some of them help us with our diligence, to some of them who just want to maybe have the opportunity to co-invest. We also built, with one of our portfolio companies, our own portfolio monitoring system. So that took 2 years of building, so that all the information we get from our portfolio companies, so every single month, comes into us on a zero-touch basis with very, very limited effort on their part. So we get all the information from every business by the 15th day of the month on a zero-touch basis in a way that can't be sort of manipulated, and it goes straight into our own sort of dashboards and reports, looking at risk and cash runway and growth and performance against plan. And this has been a really important part, because what it allows us to do is spend virtually no time doing the admin and spend all our time focusing on how we can help the founder build the best business they can. We also have a toolkit, so we have partnerships with a lot of people who, effectively this is about saving clients money, saving our portfolio money. And through our partnerships, last year we saved cash on north of 20 businesses of over £3 million. So that's cash they didn't spend or non-dilutive cash that brought into the business, which is fantastic. It doesn't mean every business is going to be a success, but what it does mean is just less cash is being spent, or we've got more cash to invest and fund. So that goes alongside the equity funding we provide. And we have evidence that this is working. So talked about the fact that we check and we go through, have all the information. So our seed stage businesses are very early stage businesses. Currently, they are growing at 181% year on year. So growing very, very quickly. Our development stage is growing at 88% year on year. So revenue, this is cumulative revenues. And that's kind of the middle band for us. And our growth stage is growing at 27% year on year, which, if I'm honest, is slower than we want it to be. We're really hoping that this year that will start accelerating, but you can kind of tell that the seed stage ones, the very early businesses, it is easier to grow quicker when you've got, hundreds of thousands of revenue rather than several 10 million of revenue. So it's natural that the growth stage would grow slower, but we do want that to kick up this year. And we have we also evidence that this is working. Everyone probably has heard of a business called Glassdoor, which is the review site for employees. Well, there's one for VC. So founders put in their feedback on their funder, or this is founders who may have approached us and we've not funded them. They give feedback on this landscape. We were named by Landscape as being one of the top 20 European seed investors, which I think is a pretty amazing achievement for us, given we're effectively, from a fund perspective, relatively early and new and probably only 3 years old. And the important part for us is where we score really well on Landscape is the things we really care about. So professionalism, supportiveness, beyond money, which sounds surprisingly like more than money. So that's good for us. And finally, I talked about real insight with investors, said it was done pretty badly. We provide twice a year regular, very detailed reports. If anybody is interested in investing, if anyone's interested in just seeing what that might look like, we'd be very happy to send out examples of the reports we send to our investors. That is a massive undertaking from us, but we think it's really important for investors to know exactly where they stand. We do video calls for anyone who wants them to kind of bring those reports to life. And we have a portal for EIS and all the reports. So it's an online portal. You can log on, your advisor can log on. EIS, frankly, is designed by HMRC to be as difficult as it's possible to be. Anyone who's dealt with HMRC will know that is the MO of HMRC. We try and take all of that hassle and headache out of it and try and give people their EIS certificates, which is what's used to get your tax relief within 6 weeks of us making the investment. And this is just a kind of example of the kind of information that we would give to investors. So you can see, graphs, financials. I know you can't read it, but every single company would get a 1 or 2 page spread every 6 months to give you a real sense of where you are. And the other thing is we have a completely open door policy. So any investor, any advisor can call up any of us and speak directly to the people who've made decisions to invest or who are on the board of companies if they want to know more. We really want to share everything that we know with all of our investors. And that's us. So summing up, were you to think about investing with us, effectively what we're trying to do and we're working on every single day is backing exceptional companies and founders, giving founders more than money, helping them build the best business they can, and then providing investors with real insight. And that's me. Thank you very, very much.